Welcome back to Investing Talk podcast. Today, we're looking into a company that, well, certainly made an entrance onto the public markets just recently, AIRO Group Holdings. We had a listener send over some info asking, what was behind that really dramatic first day of trading, and what does this company actually do? So our job today is to unpack that. We'll pull out the key facts, look at the opportunities, the risks too, and just help you make sense of what this debut might mean for AIRO and maybe even the aerospace sector more broadly. Okay, let's get into it. And just before we really start, if you find these discussions helpful, please do subscribe, maybe like this video or audio, leave a comment. We love hearing your thoughts or questions, and consider buying us a coffee. It honestly helps us keep doing this. So, ARO Group Holdings, listed on Nasdaq June 13th, 2025. The IPO price was set at $10 a share.
Right. Which was interesting because that was actually below the range they were initially hoping for. You might think, okay, maybe not so much demand.
Exactly, but then trading started, and it wasn't $10.
It's not even close. It opened at $12.90.
I know.
Well, it just took off. It surged during the day, hit highs around $25, maybe even a bit higher at points. It settled down near $24 by the close.
That's quite a jump from a $10 IPO price to closing around $24.
Yeah, about 140% gain on day one. That definitely turns heads.
So what does that immediate, huge price jump tell us?
Well, it shows there was a significant investor enthusiasm, right? Ready and waiting. The volatility, how much the price swung around that first day was pretty extreme.
Which you sometimes see with new listings, I guess.
You do, especially in tech-heavy sectors or areas people are really excited about. But it points to very strong, maybe even speculative interest right away.
And it's fascinating, that disconnect, isn't it? Pricing below the range, suggesting maybe caution for institutions, but then this explosion of demand on the open market.
It suggests retail investors, or perhaps others, were really eager to get exposure to what AIRO represents. Drones, next-gen aerospace, electric air mobility, those are hot themes.
And the volume, the amount of trading backed that up.
Oh, absolutely. High trading volume confirmed that demand was definitely there, looking for a way in.
Okay, so the debut itself was the big news headline. But let's get past day one. What is AIRO Group Holdings? What's the actual business?
Good question. It's described as a technologically differentiated aerospace and defense platform. That's a bit of jargon, but basically
it does more than one thing.
Yes. It's built around four main operating areas or segments, and the idea seems to be that these parts work together, an integrated approach.
Okay, so what are those four areas?
First up, and the biggest chunk of their revenue right now, is drones.
Okay.
This part brought in about 75% of their $86.94 million revenue in 2024. They do drone solutions for all sorts of things: surveillance, mapping, inspection, target tracking, for military clients, but also commercial ones.
And that drone business is growing.
Growing fast. The numbers for 2023 show drone revenue up, get this, 637% compared to the year before, reached $28 million. So clearly a major focus and growth engine for them recently.
Wow, okay. 637%. That's
Nice.
significant. So drones are number one. What else?
Segment 2 is avionics and electronics. This is mainly through a brand they own called Aspen Avionics.
Right, I've heard of them. They make cockpit displays.
Exactly. Navigation, communication systems, displays for aircraft. And they're targeting not just small planes, but airlines and defense customers too.
Yeah.
So the brain's inside the aircraft, essentially.
Got it. And then there's the more futuristic stuff, the electric planes.
That's the third segment, electric air mobility. Here they're developing eVTOLs, electric vertical takeoff and landing aircraft.
The air taxi concept?
Pretty much. Aimed at urban transport, flying over traffic. They mention a specific aircraft, the John Journey. And importantly, they're reporting some very large potential orders.
How large?
Over $1.1 billion, supposedly, from operators like Blade India and Red Wings. Now, those are orders, not cash in hand yet, but it signals their ambition in this urban air mobility space. It's a potentially huge market.
Okay, so drones, avionics, eVTOLs. What's the fourth piece?
Training. Under a brand called Coastal Defense. They offer specialized training services, mainly for military and commercial aviation folks.
Ah, so training people to use all this new tech.
That seems to be the idea. As you get more drones, eventually eVTOLs, you need trained pilots, operators, technicians. It can be a nice source of recurring revenue supporting the hardware they sell.
So it really does sound like they're trying to build like a whole package, not just the drone, but the systems inside, the training, covering the whole life cycle almost.
That appears to be the strategy, yes.
Yeah.
Positioning themselves across the ecosystem, the vehicles, the tech inside, and the people. It's ambitious.
Ambitious, definitely. Okay, let's talk money then. An ambitious plan needs funding. What do the financials look like? We have some 2024 numbers.
Right, the financials. It's a mixed bag, really. On the one hand, strong growth. That $86.94 million in revenue for 2024, that was up 101% from the year before.
Doubling revenue, that's very strong top-line growth.
It is.
Yeah,
But
yeah.
then you look at the bottom line. Yeah. They reported a net loss of $38.69 million for 2024.
Oof. Okay, so making almost $87 million, but losing nearly $39 million.
Correct. Which means, negative earnings per share. And things like PE ratios just don't apply when you're not profitable.
So what does that profile rapid growth, big losses tell us about the company right now?
It screams investment phase. They're pouring money into R&D, especially for the EV expanding drone tech that's necessary for this kind of innovation. But
The losses raise flags.
they raise questions about the path to profitability for sure. How long will it take? How much more cash will they burn through? They'll likely need more funding down the road if losses continue like this.
What other risks did you see mentioned, apart from, losing money?
Well, there's the volatility we saw on day one. Is that sustainable interest or just initial hype? Then there's customer concentration.
Relying too much on a few big clients.
Seems like it. In 2023, apparently 72% of their revenue came from just 2 clients.
That's risky.
If one of those walks, it's a huge hit.
Yeah, that's a big dependency. What about competition and those tricky regulations?
Both are major factors. Competition is fierce. You've got players like Joby Aviation and EVTOLs, AeroVironment, drones companies further along perhaps, or with deeper pockets. Everyone's racing.
And the regulators.
Yeah.
Especially for flying people around in new types of aircraft.
That's a huge hurdle. Getting EVTOLs certified for passenger transport is complex. It takes time. There could be delays. That directly impacts when they can start actually earning money from those big orders they announced.
And they did this IPO through a merger, right, with Colonel Group. How does that fit in?
Right. That merger was the vehicle to go public. It also brought in cash, about $60 million before expenses, from the IPO itself.
So that cash is crucial.
Absolutely. It's meant to fund the R&D, pay down some debt. They had about $3 million in notes, and maybe even fuel future acquisitions. It's the capital injection they needed to try and execute this big plan.
Okay, so lots of risks, big losses. But the market reaction was still incredibly strong initially. What's driving that optimism? What are the big opportunities people are seeing?
It really comes down to the huge trends in aerospace. The drone market is booming, projected to be, $47 billion by 2029? And commercial use is growing fastest.
Okay.
And then there's urban air mobility. That's the potentially massive one. Projections are all over the place, but some say $163 billion eventually. AIRO is playing in both those sandboxes.
So it's about being positioned for these massive future markets, just being in the right place.
Partly,
Yeah.
but they'd argue it's also their specific tech. Their own avionics, maybe AI integration they talk about. That's supposed to be their edge. Plus, you have things like regulators like the FAA trying to speed up UAM approvals, or European rules pushing for cleaner aviation. Those could help companies like AIRO.
What's the general feeling out there now after the initial craziness, the market sentiment?
Well, you saw a lot of positive chatter on social media right after the IPO. Excitement about the future of flight narrative. But even the optimists acknowledge the lack of profit. The short track record as a public company, the volatility. There isn't much formal analyst coverage yet that's normal for a new IPO. What little commentary there is tends to be sort of cautiously optimistic, bullish on the idea, but aware of the execution risks.
Okay, so pulling it all together. Exciting tech, huge potential markets, big orders reported, strong growth, massive investor interest on day one, but also big losses, reliance on a few customers, tough competition, regulatory hoops, and a very ambitious plan to juggle. If someone's watching this stock now, what should they be looking out for?
The next earnings report is key. That'll be the first real update post-IPO. How are revenues tracking? Any change in the loss situation? What progress are they making on commercialization, especially with drones, and getting those EVTOLs closer to reality?
And hitting specific milestones, like getting certification.
Absolutely critical.
Yeah.
For EVTOLs, regulatory approval is everything. Any major new contracts, successful product launches, those would be positive signals. You need to see tangible progress, not just potential.
It's interesting. You mentioned one source gave it a hold rating. That seems to capture the tension, doesn't it?
I think it does. A hold often means, look, the story is exciting, the potential is there, but...
But it's too risky or unproven right now.
Exactly. The lack of profit, the volatility, the execution risks, it suggests maybe waiting for more evidence that they can actually deliver on the promise before jumping in. It puts the focus squarely on management executing that strategy. Which brings us to a key question for you, the listener.
Right, so AIRO Group Holdings. A dramatic market entry, definitely fueled by excitement over drones and electric air mobility.
They've got a diverse platform across key aerospace areas, and they did show that impressive revenue growth last year.
But, and it's a big but, they face serious challenges. Those substantial net losses, the need to scale up, navigating very complex regulations, and fighting off strong competitors.
The IPO gives them cash and a spotlight, but the road to actually making money consistently still looks pretty long and uncertain.
So what's the takeaway here for you? It really underscores that classic tension in investing, doesn't it? Huge potential upside from disruptive tech versus very real present-day risks and financial hurdles.
And this AIRO debut is just a great case study in how the market sometimes values future dreams much higher than current reality, at least initially.
So here's something to think about. They have those big eVTOL orders on paper, and the drone business is growing revenue quickly. Can Ararube Holdings actually bridge that gap from heavy investment to sustainable profit before the challenges like running out of cash or getting squeezed by competitors become overwhelming? Will they ultimately justify that initial market euphoria?
Lots to watch there. Thanks for joining us as we unpacked AIRO Group Holdings.
We hope this helped you get up to speed quickly on a company making headlines. We look forward to exploring more topics for you next time on Investing Talk Podcast.